Welcome, everyone, to the Divorce Depot podcast. I am Dr. Elinor Robin, and I am here today with episode number 4 in season 2. We have come back for a second season at the Gainesville Podcast Studio with my friend and colleague, Nehemiah Herman. And today my guest is Deborah Beylus, who is a certified divorce financial analyst, and we are going to have a conversation here that is part 2 of a conversation we started in season 1 called Divorce Money Pitfalls. And in season 1, which I wrote it down, it was episode 11 from February of 2020, so it was right before the pandemic began. Deborah and I were talking about the sexy topics of health insurance, car insurance, life insurance, estate planning, and income tax. And we are here today to talk about part 2, more of these divorce pitfalls, money pitfalls. And today we are going to talk about things like, well, we'll start off with talking about mortgages. Before I put you all to sleep, I better stop with we're going to start with mortgages. And Deborah, you are both a mediator and a certified divorce financial analyst. And if people want to find you online, they can find you, I know, at afriendlydivorce.com in Boca. You're the Boca Raton mediator. Where else can they find you?
You could also find me at southfloridamediationservices.com, or you could look me up, Deborah Beylus, mediator, etc.
Okay. And I did, because I knew we were going to do this part 2 today for our season 2, we're season 2, episode 4, I went back and listened to the previous podcast that we did. In those days, of course, I didn't have Nehemiah, so I wasn't doing video also. It was just all audio. And we had some really good information there.
People look at divorce as a legal separation of two people, but in reality, yes, the finances are so intertwined between the couple that they have to be mindful about dividing up every component of their financial intertwining, or it will not unravel properly.
Yes, this is the truth. I'm not the biggest proponent of divorce lawyers, and I think that often when I personally believe probably only about 20% of divorces actually need divorce lawyers. I think, though, a lot of people need estate planning lawyers if they're older, over 50, let's say, and they need maybe they need estate planning lawyers no matter how old they are, but they also need financial information, which can come from a variety of sources, an accountant, a financial planner, certainly like you, a certified divorce financial analyst. But where the screw-ups happen in a divorce typically happen in relation to money.
I think a lot of people hire their lawyer thinking that the lawyer is going to serve as their lawyer, as their judge, as their therapist, as their financial consultant, and their friend. And that is not the case. The lawyer is hired to help you be represented in the law. And once the divorce is over, there are a lot of things that are outlined in the marital settlement agreement that pertain to finances that nobody can do for you other than yourself.
Yeah, even during the divorce process, certain things have to be, financial matters have to be taken care of during the divorce process. So let's start with mortgages. What do you see as the pitfall when it comes to mortgages?
So I have spoken to many couples and many people who believe that if you put in an agreement that the other spouse is not responsible for the mortgage company will care what is written in this agreement. And in reality, the only way that you can take your spouse off of the mortgage obligation is to either pay off the mortgage in full by paying it off or selling the property, refinancing the mortgage itself where you get a new mortgage, or another more popular method is by assuming the mortgage. And this is called a mortgage assumption. And this is something that's become very popular since mortgage rates are high. And that is the only way to get your spouse off of the mortgage. And this also applies to a car loan or any other loan.
Or any other loan. And so I want people to understand, sometimes they think, oh, I'll just sign the quitclaim deed and then I'm not responsible anymore. Oh, no.
Yeah, that is even bigger problem. A quitclaim deed provides the person keeping the house, you are relinquishing your rights, legal rights to that property. So if you sign a quitclaim deed to your spouse and your spouse is keeping the property and you're still on the mortgage, you have not only given up your right to the ownership of this property in the event that your spouse fails to pay the mortgage or pays it late, you are going to have your hands tied behind your back in getting the spouse to sell the property. Because you don't own it anymore, you can go to court. The judge could compel your spouse to sell the property, but you have no right to say what the property is going to be sold for. And I have been involved with post-judgment mediations where one party quitclaimed the deed to the other person is supposed to pay the mortgage. They failed to pay the mortgage. There's a clause in their agreement that says if the spouse doesn't pay the mortgage, they shall put the house on the market at prevailing market prices. Well, if you don't own the house, you don't get a say as to what the house is worth. So the spouse keeping the property can put the house on the market for what they believe the house is worth. So they can say, I believe the house is worth $5 million, put the house on the market. It'll never sell because the house is really worth $1 million. And
or 200,000
or 200,000, and they can continue to not pay the mortgage, be in violation of the agreement, but the trigger is that you'll put the house on the market. And so we have to be extremely careful about quitclaiming the deed to somebody without making sure that you are off the mortgage. And those come hand in hand. All my agreements where one spouse is keeping the property and being responsible for the mortgage states that the spouse retaining the property shall pay the balancing payment by X date, begin the process of either refinancing or assuming the mortgage from the other spouse immediately, but must be complete by this date. And if those things don't happen, then the house goes on the market at prevailing market prices to be determined by both parties because you haven't quitclaimed the deed yet. And then, of course, if you're late with the mortgage, then you could also have a trigger where the property would get sold.
What we'll often do is say the spouse remaining in the house has, let's say, 6 months to refinance or sell it. And if they don't, then the spouse who has left the house is placed on the market for sale, and the spouse who has left the house makes sales and marketing decisions. And that way it takes away and sometimes the spouse who has remained in the house then has to move out. Okay. So that's mortgages and loans.
I do want to mention things about the mortgage before we move on to the next thing. Refinancing means that you take the old mortgage and get a new mortgage. Rates are very high. A lot of these mortgage companies are now offering something called mortgage assumption, where they're allowing the couple to remove one of the responsible parties from the mortgage It is very specific to the mortgage company, and it is very powerful in this rate environment.
And so the spouse who wants to refinance or wants to keep the house has to go to their original lender and say, can I assume this mortgage, and get her off the note, the promissory note.
Very specific. Yes. And there are rules that need to be followed, and it cannot be started until you're actually divorced.
Oh, the assumption cannot be started until you're actually divorced?
Mortgage companies will often not be even willing to speak to the borrower about what the criteria is to start the assumption until they have a divorce decree sent to them.
Okay. All right. Number 2, banking. What do you say?
Banking is very interesting. I have couples who tell me that they want to continue to keep the joint marital bank account open so that they can pay each other for kid-related expenses or alimony and child support. Please close your joint account when you're getting divorced, and I will explain to you why. If I'm married and I have a joint account, or I'm not married and I have a joint account with Elinor, and I put $10 million into the account.
Ooh.
Right? Elinor can go to the bank and withdraw $10 million from that account, and she has not violated any law. Because that account is 100% mine and 100% Elinor's. It's not 50% mine and 50% Elinor's. So you keep the joint account opened. I pay Elinor. I was married to Elinor. I pay her alimony of $10,000 a month. I put the money in the joint account. She's sleeping. I take the money out of the joint account. Well, how did that pay Elinor anything? Or I go and I realize that I don't have any money to pay my own bills, and I overdraw the account and spend all the money in the account. Really, at the end of the day, I did not violate any issue with our banking relationship. I only violated the agreement that we have together, and it just creates a headache that you don't need. You could accidentally use the wrong debit account and spend money that you're not entitled to. And it just creates a big headache for everybody.
I think, though, since often it becomes such a convenience for people to maintain a joint account, to be able to switch around, we sometimes call it an operating account, to just for payments of kid expenses, the thing to do is have it in a different bank from the bank where you do all your banking. And that first of all will cut down on some of the possible errors, because you only have this one account in this bank and it's only used for kid expenses. But if you have multiple accounts in that bank, then your spouse, depending on how it's all set up, your ex-spouse might be able to even access your other accounts. So you better be careful. So I'm all for...
Yeah. I also think even in a separate account, there has to be some level of trust. Because if somebody doesn't have money and they're desperate times bring desperate measures, and they can go access the account. And while it is a violation, and it's just extra work for absolutely no reason. Use a Venmo account, use a Zelle account, use some sort of cash app where you could track the payments received and paid for kids' expenses. I usually tell the parties to leave the joint household account, which is what I call an operating account, open until they sell the marital residence and they move out. But once they're no longer living together, the only expenses they have is reimbursements for kids' expenses. It's so much easier to do on without sharing an account. So that's problem.
Yeah.
And oftentimes, and oftentimes finances are the reason why people got divorced to begin with. Why continue to have that financial stress between the two of you?
Yeah. I think there's also an app called Splits or something like that for somehow keeps track of expenses that have to be split. I'm not sure, but
For divorce,
there's so
like,
many
yeah, they
there's
also
so many
have that
possibilities.
they have that in a lot. You have to ask one of my kids, my teenage kids or my young adult kids. They know more about these apps than we do. I think you could share Uber expense now, and you could split those type of things. But if a couple is using one of these parenting apps like Our Family Wizard or Talking Parents, they also have an expense splitting mechanism in there.
Okay. All right. Next. Credit, one of my things, credit cards. I told a client this week, run a credit report. The time to run a credit report, if you've never run one and it costs you nothing, is when you're getting divorced. And he was like, okay. But I knew he wasn't going to do it. But run a credit report. I can't say it enough. Because you don't know who thinks you owe them money. What do you say, Deborah?
So when you run a credit report, and you could run a Credit Karma report, which is not always 100% accurate, but it's something, it's a baseline to start with. When you own a credit report, the credit report will show you every account that you're responsible for. And sometimes it'll show you accounts that you may not be responsible for, but you may be the additional card holder. So when you have a credit card with your spouse, who is the primary card holder? That is the only person that really is responsible for the payment of the account. But both of you are allowed or eligible to make spending decisions and spend. So just this morning, I had a mediation earlier today at 9 o'clock. I was getting frantic messages from one of my clients that they signed an agreement 2 weeks ago, and one of the spouses was continuing to use the other spouse's credit card, and he or she was not willing to pay for it. And in all of my agreements, it states the following, that the parties will stop using additional cards that are not part of their primary credit once the agreement is signed, and that each one will be responsible for their own credit cards, and that neither party will take out new credit cards or borrow using the other person's social security number. And, when you're married, you may not know if the credit card is actually yours or your spouse's. And I go through this with my clients, and we go through all their accounts that are open, and I tell them, please, if you don't know, call the credit card company. They will tell you. And canceling a non-borrower's credit card is extremely important if you want to make sure that accidentally or on purpose, your ex-spouse is not continuing to run up your credit card bills.
Yes, definitely. And if they have joint credit cards and they can't get one person's name off that joint credit card,
that's a big problem.
It's a big problem.
And it's really less and less frequent that we see this happening in new accounts, because the banks know that they would rather have one person responsible than two people. But if two people have a joint credit card, I always put in the agreement that they will no longer use the credit card unless, of course, they have to and they agree to, and that the parties shall pay either the minimum payment every month on time, or if they have a house that they're selling, I urge them to pay it off directly from the net proceeds of the Barrow residence, and then close the accounts, because you should not own a joint credit card with your ex-spouse unless you have the most wonderful relationship with them. And even then, though things happen, people change.
And when he goes out and buys dinner for some other woman, that's the end of everything being hunky-dory. So it just doesn't work. One thing we do tell people is both of you go out and get another credit card and then do a balance transfer to pay off this amount. A lot of times they can get that balance transfer at a lower rate of interest, so they can pay it off faster anyway. All right,
that's the last thing. And have good credit. When you don't have good credit, then and I also run into that issue where one party is the only one who has the credit, and the other person, for the most part, had additional credit cards. During the divorce process, because it takes several weeks or even months, I tell them to take out a new credit card, pay it off every month, and build your credit during the divorce process.
Yes, definitely. Good advice for everyone. Last topic here is passwords and privacy. I had this issue in one of my cases recently where a person changed the password on his phone but didn't change it good enough, and so the soon-to-be ex-spouse went in and saw texts which were from a family member and were damaging. They damaged the relationship because the people texting you assume that they have some level of privacy. And so what do you say about privacy and passwords?
When it comes to privacy and passwords, I urge everyone, even those not getting divorced, to change their passwords often and change it to a password that the other party cannot see. Very important. Oftentimes, the phone messages will go to another, like if you have an Apple phone, will go to another Apple device. So if your children or child have an iPad, sometimes the messages accidentally or unintentionally will go to their device, and if they're at the other spouse's house, the other parent can have access to the account. But that goes for every device, including your Netflix and streaming devices, and it also means your email accounts at work and your personal emails. And if either party is consulting or speaking with the mediator or is represented by an attorney, they have to be very careful that their soon-to-be ex-spouse doesn't have access to their information. Now, is it illegal? That's a separate conversation for you to discuss with a family attorney. But if you never change the password and you live together and you share a computer, there are lots of things that could happen and that could be damaging to your rights as a parent or as a spouse, that could be well avoided by changing the password. Recently, I had a client call me and tell me, well, I don't know my password. I just asked my ex-spouse for the password to my email, and I was getting all sorts of emails from my attorney confirming things that I never said. Be careful, because once someone has the password to your email, they can use your email and ghostwrite. Now, I am not saying, I like to believe that most people, I give them the benefit of the doubt, but temptation is there. Why give the opportunity for somebody to look through your stuff?
All right, so we're going to leave it at that. Change your passwords. Change your passwords. Change your passwords on everything, on your banking, on your credit cards, on your Facebook, on your phone, on everything. Change your passwords. And don't give the
password to your children, for your children to put in the middle to tell the other parent.
All right, well, Deborah, thank you so much for being my guest here at the Gainesville Podcast Studio. This was episode 4 of season 2. I think episode 4. Yes, episode 4 of season 2. My pleasure. And I will be talking to you soon. And if people need you, tell us your phone number so somebody could call you if they have a question.
Feel free to call me at 561-789-0710, or you can go on to my website, or you can go on to my website, southfloridamediationservices.com, Deb at South Florida Mediation Services. You can go on Facebook, you can go on social media and find me. And my one word of advice before I leave here is, if you're getting divorced, try to mediate. You will end up in mediation regardless of whether you hire an attorney, file for divorce yourself, or go to a mediator. You might as well give it a try. It saves a lot of aggravation, and the process is very seamless.
All right, everybody. Wait, why don't I see me? Okay. Bye-bye, everybody. Bye-bye.
Be well.